Yo, what up everyone? In this video, I want to recap a trade that I took today on the S&P 500. I also want to go over some other trades that we took in my Discord community, along with the psychology behind this setup and the mechanics of market context, how to read it better, and how to adapt to current market conditions and trade differently in different environments. So it's going to be loaded with a bunch of information. Be sure to hit the subscribe button. And if you haven't already done so, I recommend following my Instagram at Ameritrade. I will link this in the description below to follow it. On here, I post daily trading recaps along with very good trading tips and tricks that you're really not going to find anywhere else. Link is in the description below. You're missing out on this resource if you're not following it. But now let's get right into the trade. So today I traded SPY 431 calls. It was off of very simple analysis using price and volume. I stress it a lot. The more simplistic your style and your strategy is, the easier you're going to make trading on yourself. The more noisy it is and the more confusing where you're trying to guess back and forth, the harder you make it on yourself as a trader. So my charts are completely naked. I use price imbalances and I'm a very contextual trader where I gauge the auction. To go over the context, let's go over the pre-market plan. I post these every single day in the Discord of what I'm watching, the levels that I'm looking out for, and potential setups based off market context. So we have the S&P 500. Overnight, we bounced at a 4275 and 4272 demand, and we were creating demand on the way up at 4295. So just off of that context alone, we have buyers factored in. Now, where the market environment comes into play is yesterday we saw very aggressive sellers and very weak buying from that morning sell-off pretty much for the first hour and a half all the way into demand. Now, we did have a bunch of demand higher, and this all got invalidated from those aggressive sellers and those weak buyers. But this 4275 4272 demand zone is a very key area that I want buyers to defend, I want buyers to hold, and I want them to show effort in moving higher. So overnight we bounced at it, the buyers stepped in the middle of the night and brought us up, and then we created demand on the way up prior to the open, and then the market opened up. So we have that context in the head. This was posted an hour before the market opened. So we're approaching a very key area of supply at 4330, 4347. It's a used imbalance. I want to gauge how the participants react here. I may look to play puts, but I also said if any demand is created or price is accepted above 4330, it voids the short. Now, we could, as traders, only plan for so much. I say this all the time. You have to plan and react instead of predicting. So if you try to predict, you think your ego is going to get involved and you want to be right 100% of the time, trading is not going to work out for you. Instead, you have to react and plan for things that happen spontaneously in the market whenever you get your confirmation signals, whenever you get a red flag, etc., etc. So the market opened up. I was watching it pull back into this 4295 zone. We had the supply above at 4330, 4347, and I said any demand created above that gets invalidates the supply zone. So we opened up, and immediately, if you're watching price develop, I cannot stress how important this is. I've made a video in the past. The whole course is about this, about developing a deep relationship with price and volume. It is the storyteller, and it gives you every single piece of information you need to know when you were trading the market, bullish or bearish. I don't care if you trade the market, the indices itself, the S&P, NASDAQ, the Dow, or if you trade other stocks, penny stocks, crypto, Roku, Amazon, Facebook, Apple. It doesn't matter what instrument you trade. Price and volume, supply and demand, and the auction process of the market is truly all you need. And if you leave your emotions out of it, it's crazy how powerful it is. But going back to developing a deep relationship with price and volume, what I mean by this is you really have to connect with how the market is facilitating trade, because constantly that story that the market's portraying is going to throw different context clues out at you, and you as a trader have to be able to react and come up with a plan based off of that. So in the first 6 minutes, the market opened up, and because of that context in pre-market, I was watching for a breakout and continuation into that 4330 zone. We also, if we pull up the NASDAQ chart over here, NASDAQ was wedging pretty well. We had a nice wedge, higher highs, higher lows, and we bounced off demand overnight, and we wanted to break out above this wedge. That's going to come into key with this S&P trade. So we started moving up, and immediately around the 4315, 4312 area, as soon as we came up here, it got shut off immediately. I say it all the time as well. It's like walking into a room and you see something you don't like and you run out the other way and you run as far as you can. Same thing happened here. The market moved up. There was like a seller sitting up here. Buyers gave up and sellers started putting pressure. We have some heavy volume down here, and then the market started moving down. So right there gives me the context that we have something delaying the move up, or something sitting there that's really agreeing that, or disagreeing that this is proper value, and the market moves back down. So another bullish sign that I saw here was we came into VWAP, and when we defend VWAP like this, it's a good area for these large traders to leverage into a position. We came back, made a higher low at VWAP, and some nice heavy green buying pressure down here, and then the market showed a move up. Now, right then and there, we got very key signs of buyers factored into the market, but we had this one little issue right here of the seller sitting here. I did not like that. And then this candle at 946, there was also from the 4312, 4313, those same sellers showed the same amount of responsiveness up there, and I really wasn't a fan of playing to the long side until we could get above this area and those sellers start giving up on their position. Because what this views to me is it could be a seller spoofing the market and is actually on the bid side buying and leveraging into a large position. And later in the day, this got validated once demand got created down here. So my analysis with the demand was validated. So what I said was at 9:49, this is in the intraday commentary tab where I post my thought process throughout the day of what I'm watching develop and different contexts that I'm seeing the market give to me. I try to display it as best as I can whenever I see something of quality. So I said I'm watching how SPY reacts if we could get above the 4314. Seems to be a large seller sitting at the 4312, 4315 area. If we put pressure on him, it should bring an upside reaction. If we get below it, I'm going to remain neutral and need new context. And I would like NQ to break out as well to support this analysis. So what I said about the seller sitting there is the market also comes down to not only value, but to effort versus reward. If you're a seller in the market, let's just say there was an actual seller up here, you want to get rewarded if we start moving down. You want to show effort and put pressure on bulls. We really didn't see that because of the context in pre-market and the context off of VWAP as well. So we have a seller, they're not really showing effort, they're not getting rewarded. Same exact thing here, we come back up, they show a little effort, but they're really not getting rewarded to the downside. And then we finally get above the 4313, 4314 area that I said that I'm watching if we could get above for an upside reaction. So at this point at 950, show you what the candle looked like, just like this. At the open of this candle, I played SPY 431 calls at $2.35. I posted my entries in the Discord if you all members want to go back and see it. But I got long when it looked like this. My risk was about this 4310, 4309. It was a type of trade where I wanted it to work out right away because if the bulls started putting pressure on those sellers at supply, we would try to continue moving higher, and that seller would not have got rewarded. They would be forced to close their position. They would have to cover, and sellers are technically buyers in the market. So now I'm in this position. Every single time I enter, I have a predetermined plan. Like I said, entry, exit, stop loss, target. And now I let the trade develop. I let it work itself out, and I do not let my emotions be a barrier or an obstacle in this trade. We start pushing up, buying pressure starts coming in, some nice candles breaking above the high. And this is how you could use, other than longing off demand or shorting off supply, you could use the zones as magnets because at this point, I'm targeting the 4330 zone. Now that I know buyers are factored in, start moving up. And in the intraday commentary tab, I said I was taking some profits off at 955. Looked like this, that quick push above the high, some heavy volume coming in. I got out, I believe, at $2.70 from a $2.30 entry. So nice gain off that. It was half my position because I like scaling out into strength. said now the trade can never go red. The stop is remaining is where I bought out some more here, or we'll get to that. So now we're up. I boosted my stop loss up. Trade can never go red on me. We pull back, right? Now, if you're trading off of emotions, you're trading off of what you think's going to happen, the market can't go up forever. You're going to have to get some profit taken. You're going to have to start pulling back, consolidating, leverage into another long, something. It can't keep going up forever or else there wouldn't be a market. So as long as we have buyers factored in, the trend's intact, you can't let a little pullback scare you out. I already sold some, so I was a little at ease, but my stop loss was down here at break even. Market pulled back. I think the contracts actually were at like a cent or 2 cents above from where I bought at. We found support at old resistance. We held it. And then boom, we got another quick push up, heavy volume coming in. And then at 10:02, the candle looked like this. As soon as we started stalling out, I got out another 25% of my position, 10:02. Very simple analysis. All it takes is using context, gauging where participants are, where they'll be in pain, where they'll get rewarded, and where we'll put pressure on them. Just being protective. And then I said I'm full sell my position at 4330 supply, and I got all out at 10:10. So it looked like this. A quick push into supply. Now, this is where trading becomes hard because I sold right here at the 10:10 candle, right at supply, right? I sold that. Last sell was at $3.20 or $3.17. If I held, these contracts would have went up another 40, 50 cents. And by end of the day, these went up another, $2 or something like that. They were like $5.60, I think, or $4.80. But I will never complain about profits. I followed my plan, and you have to accept as a trader, you are never going to buy at the bottom. You are never going to sell at the top. You're always going to leave profits on the table. It's normal. If you complain about, oh, I could have made an extra $2,000 if I held for another 2 minutes. It's the wrong approach to look at it. You follow your plan. You take profits as needed. I've known, even myself, I know tons of traders that leave profits on the table because either they're protecting themselves or B, they're just simply following their plan. So never complain about your missed profits. If you executed your plan, win or loss, it's a very good trade. Now, NQ also supported this analysis. We broke out of that wedge at the same time along DS. So this kind of gave me a boost of confidence, added confirmation, and it definitely aided that setup. And then we came into this 4347. It's extremely key supply zone, but we stalled out at it. I said I'll never complain about a trade I followed my plan on. And then, let's see right here. I said, now we're at this supply zone. I'm not looking to short it. Just sold my full SPY long position. Going to let the market breathe, develop further to gain more context. Buyers are pretty strong. I'm not interested in step in front of them. It was just like the action we saw yesterday where sellers were pretty strong. And if you played calls on them, you would have got screwed. Same thing now on the upside, but the context is buyers are strong. And there was no reason to be short. I was saying that to members pretty much all afternoon because I didn't want to see anybody take a loss at the supply zone with the current context. A lot of people see a pink box and they think they got to short it. But when you add context, it either avoids you getting into a trade early, it avoids you taking the trade to begin with, or it'll actually give you context to take a trade off of with a high quality one. So pretty much consolidated all afternoon. As soon as volume started dying down at the supply zone, this is what I call FOMO hours, and the quality of setups completely diminish. FOMO hours are active. We're basing at supply, which could be seen as a bullish sign. But we got 30 minutes now until the market closes, and there's really nothing going on. So no other trades. The opportunity comes when there's volume. When volume dies out, there's still opportunity, but you got to be very selective with what you trade. There were some decent setups on other names. Boeing bounced off of this 223 demand zone. Some nice lower wicks as the Dow was rallying. So clean move off of that for about 3 points. AMD bounced off of the 100.80 demand zone and had about a $2 move from that. So there are some nice setups. Just make sure the market confirms it. And in my opinion, reading context on SPY and QQQ with all the volatility has been extremely easy and probably the most efficient. But I'm going to leave you all off on that note. If you enjoyed this video, I'd appreciate it if you could hit the thumbs up button. subscribe to my channel, and if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord. I promise members I'm going to start using the voice chat feature a little more throughout the day so you can hear my thoughts and my voice throughout the day as the market's developing. But besides that, I'm ending it. Peace out.